Hello, good evening, namaste to all of you. Is my audio clear to you? Is my video clear to you? Yes. Are we good to start? Yes. I can see in the chat box it's a yes from all of you. Perfect. Yes, it's been a long time. Somebody is saying seeing you after a long time. Yes. Yesterday when I announced this MCQ live, I had sent a message on our Telegram groups saying, hope all of you are on fire. I actually meant three things. One, you're on fire because you're studying well. Second, you're on fire because exams are on the way very soon. Third, you're on fire because it's almost 37 degree Celsius everywhere. Yes. So that one line was actually for all the three. I am also on fire, doing really good, and I'm not writing May 2024 exam. And yes, I am also enjoying 37 degree centigrade. Yes, chalo. So here is the quick summary of what I'm planning to do the next 5 days, starting from 5th April today. We will be discussing MCQs every day evening, 7 p.m. to 8 p.m. I'm not going to take much of your time, about 5 hours. My plan is to complete discussing all the MCQs. 5th April, today we will be doing scope, objective of financial management, and investment decision, or as we call it in class, capital budgeting. Tomorrow, risk and leverage, cost of capital. After that, for next 4 days, starting from 6th, 9th till 9th, we'll be covering entire financial management every day evening 7 p.m. to 8 p.m. Yes. And after this, after 9th April, I'll also be doing cost accounting, multiple choice question series, MCQ. Since most of you have messaged me individually that you want me to do MCQ of marginal costing, standard costing, and budgetary control first, because number one, that's important. Number two, our subject is cost and management accounting, and these three topics come under the category of management accounting. So there will definitely be some questions on these three: marginal, budget, and standard costing. And I always, as I say, these three are favorite topics of many students, especially standard costing being their number one favorite topic. No wonder most of the students have messaged me asking me to do these three topics MCQ first. Therefore, once our FM MCQ series is done, I'll be starting with costing MCQ series, and that we will start with marginal, budget, and standard costing. Once these three are done, I'll be doing all the other topics. All right. I hope this is clear to all of you. For those students who are watching my session for the first time, if you wish to purchase entire financial management classes, only FM, not strategic management component, only FM, even that is available on yashasacademy.com website. for next 3-4 days, as Yugadi is approaching, we are running a special discount offer. So you have a price reduction for next 3 to 4 days. I'll be sharing the link to purchase those classes if you wish to. Those who have already attended my regular class, we can start off with our MCQ discussion today. And some students in chat box are asking about FM marathon revision. Guys, this is already there on Yashas Academy YouTube channel. I have done a 6 hours of YouTube revision free. It is open to all of you, and that has all the important concepts discussed. In that, what I have not done is MCQ, which I'll be doing today. So other than MCQ, I've already spent 5.5 to 6 hours. I have done that marathon revision. It's already on YouTube channel of Yashas Academy. Okay, if you still don't get it, message me on Telegram. I will share the link with you. Okay, and today and next 4 days I will be discussing the MCQs on PowerPoint presentation PPT. But don't worry, at the end of 5 days session, I'll be sharing all these questions on a drive, and the link will be shared with all of you. You can freely download that. On day-to-day basis, I'll be doing it on PPT, because in PPT I can put a question and all the 4 MCQs options, and we can have a discussion, and I'll also present the answer in front of you. So for that convenience purpose, I'll be using PPT for today and next 4 days. I hope this is clear to all of you. Yes. Before I start, as I always say in class, we are not here to sit and listen. I want all of you to have a notebook next to you, pen and calculator. You will have to solve a couple of questions and send me the answer in the live chat box. It will not be sit and listen session for next 1 hour. You have to actively participate, and I want each one of you to send me the answer in the live chat box. And when you send the question number and then the option, because some of you may be watching with 30-40 seconds delay because of internet issues. Therefore, when you're send question number, say 12, correct answer according to you is option A. Then send it in the chat box as 12A, 13B, and so on. Is that clear, everyone? Yes. All good? Can we start with the first question? All right. Here we are, starting with the first topic: scope and objective of financial management. Guys, lot of the students 1 month before exam want me to do, and even accounts faculty to do, only theory revision, because as I know, many students, they don't study theory along with their regular revision, which is a big mistake. This I have been telling in our face-to-face class, online class, on daily basis, that you cannot segregate theory and practical and do your studies. You have to study everything together. One topic is equal to one topic. There is no theory part of topic, practical part of topic. It should be understood as one topic and revised as one topic. Clear? However, since most of you have not still completed theory revision, I have decided to do even theory topic MCQ in today and next 4 days of class. Therefore, I am starting with the first topic, which itself is complete theory. And even in the other topics, I have selected more theory MCQs than practical MCQs. So in a way, along with MCQ, we can even finish off our theory revision quickly to some extent. Having said that, I want you to give equal importance to both theory and practical. Is that clear to everyone? Yes. Chalo, good. Starting with scope and objective of financial management. Question number one. I want all of you to reply. Don't worry about writing down the final answer. Yes, this YouTube video will be there. It will not be removed. Any day you can come back and refer to this. And the PDF of all of this, I will be sharing it with you on the last day of this series. So do not worry about the final answer. Sit, understand the question, work out the answer if necessary, and tell me the answer. And if you're doing any mistake, ask me to repeat. I'm happy to do so. All right, chalo. Question number one. The shareholders value maximization model holds that the primary goal of the firm is to, number one, tell me, is it to generate accounting profit? Definitely no. If you remember in this topic, the important theory, one of the important theory concepts was profit maximization versus wealth maximization, correct? When I say value or wealth maximization, profit is one part of wealth creation. If you remember, this was the explanation done in the class also. Profit is necessary to create wealth, but alone profit will not be sufficient to create wealth. So when I say wealth, how do you measure the wealth? Wealth is measured by market value of the share. In fact, it is number of shares into market price per share. This is called as what? Market capitalization. Remember this, number of shares into market price per share is called market capitalization, or in class we call it as market value. If you see today, Reliance Industries market capitalization is around 20 lakh crores. 20 lakh crores. How did they reach this number? Number of shares of Reliance Industries into market price per share. Therefore, the objective of the company is to improve value of the firm, correct, or value of the share. Therefore, profit, liquidity, working capital are wrong answers. Option C, market value, is the correct answer. Chalo, question number two. Shareholders' wealth in a firm is reflected by what? How do you measure whether shareholders of a particular company, whether they are wealthy or not? First, number of people employed in the firm. This is labor. The book value of the firm's asset less book value of its liability. This will give you net book value again. This won't help you. Book value is not the correct measurement. Remember, many times we have discussed this in class. It's the market value, it's the real value that matters. Third, amount of salary paid to its employees. Definitely not. Last one, market price per share of the firm. I think that is the correct answer. Yes, sub question, sorry, question number two, correct answer is D. All good. Question number three. Focus of financial management is mainly concerned with the decision related to financial activities, investing activities, dividend activities, actually all of the above. Remember, in the first topic, you have three functions of financial management, correct? Financing decision, investing decision, dividend decision. A quick revision. What is financing decision? Deciding from where to get the money, whether to get the funds from share capital or use reserves and surplus or go for bank loan or go for debenture. That's the first thing. Second, investing decision, where to invest, when to invest, how much to invest, if there are multiple projects, which project to select. This is what we discuss in detail in our capital budgeting or investment decision. Third was dividend decision, basically to decide where should, sorry, how much should be my dividend, correct? Should I pay more dividend, less dividend? If I say more dividend, I'll be keeping less reserve with me, correct? And vice versa. And if I say no dividend at all, will that create a problem? Will shareholders be happy, unhappy? Remember all this discussion? That's exactly what we call as dividend decision. Basically, FM is about all the three. Therefore, the correct answer should be all of the above. Yes. Question number 4. The main objective of financial management is profitability. No. First of all, tell me, everybody, I want you to answer this in chat box. Profitability is one of the objectives, but that's not the main objective. Is my sentence correct? profit maximization is one of the objectives. We should never tick an option which says profit maximization is never an objective. That's a complete wrong sentence. A company cannot create wealth without earning profit. Please understand, before you give me final answer, understand what I'm saying. Profit maximization is one of the objectives, but profit maximization is not the only objective. I hope you're understanding my sentence properly. Is profit maximization necessary? Answer is yes. Is profit maximization the only objective? Answer is no. Therefore, coming back to this question, the main objective of financial management is to maximize shareholders' wealth, correct? Sub question C says enhancing the cost of debt. This can never be the correct answer. Why do you want to increase the cost of debt? Everyone understand, cost of debt should come down. If you can connect this to capital structure topic, value of the firm is equal to EBIT by cost of overall capital. You want overall cost of capital to come down, correct? If your cost of debt is going up, how can the overall cost of capital come down? Correct? So that's a complete wrong answer. So final answer is option B. All right. Question number 5. Wealth maximization approach is based on the concept of cost benefit analysis, cost flow approach, time value of money, all of the above. Tell me what is the correct answer. Wealth maximization approach is based on the concept of, question number 5, it should be, I think option, this should be option D. I'm sorry. Yes. Who can answer this? Wealth maximization approach is based on the concept of, yes, actually there is a small mistake in the printing here. Yes, it should not be cost flow, it should be cash flow. Sorry, this will be corrected before issuing PDF to you. Don't worry, it should be cash flow approach. That means now if you see wealth maximization approach is based on cost benefit, cash flow approach, time value of the money, correct answer will be all of the above. Yes. All right. Let's move on. Question number 6. Everybody, question number 6. Decision about mergers, takeovers, expansion were covered in financial management under dash phase of financial management. Traditional, transitional, modern, and none. Traditional is the correct answer. Understand, modern phase of financial management is not about expansion. Remember, in the same theory topic in your textbook, you had this line, everybody, you had this line saying role of CFO in today's world, role of CFO in today's world, correct? In that you had all of this: IT, information technology, securing the data, correct, against misuse of information, against leakage of information. All of this is only the modern discussions. Traditionally it was all about expansion, correct? It was all about mergers, takeovers. Merger and takeover is not a new concept. Merger and takeover has been happening from generations together, correct? This is not the first time we are doing merger or acquisition. Yes. Question number 7. Management of all matters related to an organizational finance is called as cost inflow and outflow, allocation of resource, financial management, and finance. Financial management is a very simple and silly question. When question says all matters, understand it's about financial management. They did not say, look, allocation of resource is all about where should I put my money. I have some money, where should I invest? Allocating is all about where to invest. Remember, working capital management. I allocate my money for day-to-day activity. I allocate my money for long-term activity, investment decision. When you say all matters, it's about overall financial management. Simple. Question number 8. Reserves and surplus are which form of financing? Security financing, internal financing, loan financing, and international financing. Sorry, I think by mistake I showed the answer to you. I should not. Think and tell me. Reserves and surplus, when you say, it is the money that is already with the company. Am I correct? Everyone understand first before you send the answer. Reserve and surplus represents what? Money that is already with the company. When you say security financing, you are issuing shares. When it is reserves and surplus, why should you issue? When you say loan financing, you are going to bank and taking money. Correct? When you say international financing, you are taking money from somebody from another country. And we're talking about reserves and surplus. This is our own money. Our own money is called as what? Internal financing. Yes, perfect. Question number 9. Which of the following activities are performed by CFOs now in addition to those performed by past CFOs? This is something I covered 5 minutes ago. Not even 5 minutes, I think just 2 minutes. Correct? Understand risk management is the new thing that CFOs are managing today, which was not discussed 20 years ago. 20 years ago, if you ask any CFO what is his or her duty, they would never say, I'm taking care of risk management also. Now, risk management is about foreign currency fluctuation. Risk management is about interest rate fluctuation. Risk management is about somebody leaking the data of the company. Risk management is about somebody hacking the server of the company and impacting the data and the operations of the company. Today's CFO, in addition to the traditional financing activity, he is also taking care of risk management. Yes. Question number 10. Financial management is mainly concerned with acquiring and development of assets, acquiring, financing, and managing the assets, efficient management of business, sole objective being profit maximization. Read all four. None of this I can call as wrong answers, but which is the most appropriate answer, which covers maximum concepts here. Financial management is mainly concerned about, read option B properly. It says acquiring money, financing it, managing the asset to accomplish the overall goal of the business. That's a better answer. Sir, is option C, efficient management of business, a wrong answer? I told you already, none of the four. I would say none of the four are wrong answers, but which covers broader area is option B. Am I correct? Am I correct? Question is about financial management. Understand, efficient management of business is a general word. This is what CEO does. This is what chairman, president, they do. Correct? When you're talking about financial management, the focus should be on money. And when you read point number B, acquiring, financing, managing the assets, correct? To accomplish the overall goal of a business. Business has a goal to become number one, correct? In next 5 years. How do we reach there? For that, you have to put all the numbers, correct, on a budgetary statement. From where do I get money? Where do I spend money? How do I manage my day-to-day resources? I should not over invest in long-term assets. I should not have very less money for day-to-day activities. I need to manage all of this. All of this put together is option B, correct? Option D also, Shalini, sole objective of profit maximization. I cannot say profit maximization is not the objective. It is one of the objectives, correct? But it is not the only objective. Therefore, if they say, is this the only objective? Then you can say, I know your confusion is because the word is sole here, correct? For a minute, take that out. Profit maximization is necessary, but that's not the only thing that you need. I hope this is clear. Perfect. Question number 11. Which of the following need not be followed by finance manager for measuring and maximizing shareholders' wealth? Read all the options properly. I think this is the last question. Yes, yes. Go slow. Think and tell me. Which of the following need not be followed by finance manager? Accounting profit, when you say, understand this is purely based on P&L account and balance sheet, correct? All historical concepts, nothing about future. It's all about past and present. Second, cash flow. This is about cash coming in and going. Remember, in investment decision, we do CFAT, cash flow. We don't take PBT or PAT. We do CFAT. Cost benefit analysis. This we do in most of the decision making. Incremental approach. If you can recall, in capital budgeting, we had this. I'm already having an asset. I'm planning to replace that asset. Correct? Should I replace? We compute what? Incremental cost, incremental benefit. So cost benefit analysis is used. Application of time value of money is used in the entire topic of capital budgeting. Therefore, option A is the correct answer. This will not be followed because this is based on historical cost concept. This is based on past data. This represents only what has happened during the year. We are in the month of April. That means you get the data till 31st March. But I can't change anything. The financial year is over already. Correct? This is about future. Financial management is all about where should I put money to improve my wealth in future. Therefore, it should not be based on historical data. All right? Yes. Everyone, can we continue? Yes. So with that, we are done with our introduction and theory topic. I'm now starting investment decision, capital budgeting. Guys, is the speed okay? Am I going fast? Speed is okay. And for those students who are not from my latest batch, okay, if at all, if you think I'm going little fast, it's only because of my latest batch, because they said, sir, we are watching all your recorded classes at 1.5x. Therefore, I've decided on YouTube live today I'll go at 1.5x. I hope the blame is not on me. Yeah, perfect. All right, investment decision or capital budgeting. Let us start. Question number one. Everyone, go slow. Capital budgeting requires use of various methods, including statistical techniques. Definitely true. In fact, I have told you this in the class also. In old syllabus, we had risk analysis in capital budgeting. In that, we used to study probability analysis, standard deviation, variance, coefficient of correlation, lot of things. But those things have been removed now in the new scheme. But capital budgeting uses lot of statistical technique. It's removed from our syllabus, doesn't mean it's not there at all. It is there, but not for our syllabus. We will study this in CA final now as per the new scheme. So capital budgeting will use lot of statistical techniques. So, question number 2. Money in hand today is less worth than money that is expected to be received in future. Think and tell me. Money in hand today is less powerful than money that is expected to be received in future. Who can answer? Take your time. Question number 2. If you read it incorrectly, you will give a wrong answer. You have to be slow here. Option A or option B? Some students are giving a wrong answer because you are not reading the question properly. I know that you know the concept and I know you are reading the question incorrectly. Please read. Money in hand today is less powerful than money that is expected to be received in future. It's a false statement. Guys, please understand. Today 1 rupee is equal to 1 rupee. 1 year later 1 rupee is equal to 90 paise. Correct? How can the future money be more powerful than today's money? Following? Those students who gave wrong answer, you did not read the question properly. Don't do this mistake in exam. Money in hand today, 1 is equal to 1, is less powerful than money in future. Money in future can never be 1 rupee. It will be less than 1 rupee because you will discount the future cash flows, correct? You have to be slow, please. Chalo. Question number 3. Find out the present value of 80,000 rupee to be received after 5 years when the required rate of return is 10%. Everybody, Calci is with you. Notebook is with you. I want you to participate. Yes, understand the question first. Present value, that means today's value of 80,000 to be received when? After 5 years. Tell me how to do. 10% discount rate, that means first I have to do 1 divided by 1 plus R, and rate of return R is 1.1. So 1 divided by 1.1, this 0.909 will be discounting factor at the end of year 1. But this question is for 5 years. That means you have to repeat this for 5 years. Then you will get what? 5th year factor happening. 5th year factor. That should be multiplied with 80,000 rupees that you're going to get. Many students are saying option C. Is it approximately 49,674? Good. Guys, please understand one thing. Suppose in exam, when you do this, because of rounding of difference, if you get the answer as 49,672, please do not tick nota. Please do not tick none of the above. Your answer is correct. It's only the rounding of difference. I hope this is clear. You will tick none of the above only if the correct answer is somewhere like this, 49,995. If it is far away from other 3 options, then you tick. If it is 51,000, 57,000, tick it. For 2-3 rupee difference, please do not tick none of the above. Tick the nearest number. What if this is also one more number like this, 49,100? Now what to do? Now you are okay to tick the nearest number. Therefore, keep this in mind for 2-3 rupee difference. Yes, don't tick none of the above in exam. Good, everybody, option C is the correct answer. Next, tell me whether this statement is correct or not. Present value means what? Today's value is equal to future money to be received in future will be multiplied by present value factor for rupee 1. Is this statement true or false? Some other elements are missing, depends upon situation. Now please understand, if you are not getting a theory answer, you know the best technique? You're not getting a theory answer, put some numbers. I am going to earn 10,000 rupee after 1 year. 10,000 rupee after 1 year. How much is its today's value? How to do? 10,000 multiplied by discounting factor. Correct? Discounting factor is nothing but present value index factor PVIF. Present value index factor PVIF, which is nothing but present value factor for 1 rupee. For 1 rupee, how do I get? 1 divided by 1 plus R. And here rate of return, I have taken it as 10% for learning purpose. So it is 1 divided by 1.1. That means you're going to get 0.909. So when you do 10,000 future cash flow into 0.909, you will bring it to today's value. Today's value, we call it as what? Present value happening. Therefore, the answer is true. Everybody, chalo. I am adding one more question, which is not on screen. Listen to me. If you are earning 10,000 rupee for 3 years continuously, year 1, 2, 3, 10,000, again 10,000, again 10,000, will you multiply with present value index factor, or will you use present value annuity factor? Which is correct? PVIF or PVAF? Understand and reply. Will I use PVIF or PVAF? If you want, I'll repeat the question. Same 10,000 rupee earned for 3 years continuously. Why should we multiply with each year factors independently? Can't we do PVAF? What is PVAF? Present value annuity factor. Able to recall? And when to use this PVAF? When my annual CFAT numbers are same. Annual CFAT numbers are same. Annuity is to be used when my annual cash flows are same. Hope you're able to recall this discussion. Yes. Perfect. Guys, since now we have MCQ in intermediate exam, they are going to ask all these conceptual questions in MCQ itself. Imagine a question like this: PVIF to be used when dash and PVAF to be used when dash. Correct? PVIF will be used for each year when every year annual CFAT numbers are different. PVAF to be used for all the years put together when annual CFAT number is same. Yes or no? Correct? Therefore, you have to be conceptually good, not just long answers. You know, these kind of things be little slow. And if you're not understanding the theoretical question, as I wrote on screen, you put some numbers, you convert that to a practical sum, you'll automatically get to know. Let's move on. Question number 5. Everybody, slightly big sum. This can be asked for 2 marks MCQ. By the way, looking at the latest mock test paper, it is not that you will be having only 1 mark MCQs. You can even have 2 mark MCQs. You will even be having 2 mark MCQs. So if you see any lengthy question, understand that can be a 2 mark MCQ. Alright. Chalo, Vaishnavi, I'll clarify your doubt. Just give me a minute. Let others start solving this sum. Yes, everyone. Question number 5. Please read. A company has invested 8 lakh rupee in a business. Expects a series of cash flow as per the given details. Year 1, 2, 3, 4. Cash inflows given. Additional cash outflows given. Now, when you take year 2, you should not take 4,20,000 as inflow. All of you. It is not 4,20,000 inflow. You have to minus 105,000. Yeah, same way, even year 4, it won't be 2,50,000. You have to minus the outflow. All right. At the end of 4th year, that is when the project is about to get over, company will make a sale of scrap of rupee 2,40,000. Tell me, this will become cash inflow at the end of the project, correct? Understand, this 8 lakh will be taken as cash outflow in year 0, initial investment. Therefore, this 2,40,000 should become cash inflow in the last year of the project. Last year of the project here means what? 4th year. Question is, find out NPV if the discount rate is 10%. I want everybody to solve this in a rough paper and send me the answer. I will wait. No problem. Year 0, start your table like this. Year 0 minus 8 lakh. Year 1, 2, 3, 4. Year 1 and 3, no confusion. Year 2 and 4, you can't take only inflows because there are outflows. And year 4, there is a special adjustment. You also have to take scrap income with a plus sign, positive sign, because it's a money coming in, and 10% discounting. So you're supposed to do 1 divided by 1.1. Go ahead, give a try. Some students are saying option C. Nearest number is 278,400. Nearest number you have to tick. I've already told you. While others are solving, Vaishnavi, present value should be more than the future value, correct? 1 rupee today is more than 1 rupee in future, correct? But when you have to take a decision, you make investment today. and your inflows will come in future. So outflow is happening right now, but inflows will come in future. So what is the correct way to take a decision? Money is going out today, bring all future inflows also to its today's value. That's why it's called as present value. Money is not coming today. We are converting that future figure to present figure by discounting. That's why 100 rupee earned at the end of year 1 you will take as only 90 rupee 90 paise. Correct? 90.09. Why? It is the 100 rupee coming after 1 year. It will not be worth 100. It will be worth less than 100. Money loses its power. Correct? So we are shifting future cash inflow to their real values. Understand? Discounted values. That's why we call it as present value of future cash inflow. Today's 100 rupee outflow is 100 only, no confusion. But 100, if it is coming back after 1 year, in book value it is 100, but in real power it won't be worth 100. You have to bring it down. To bring it down, we call it as present value of future cash inflow. Yes? Alright. Many students are saying option C. Perfect. That is the correct answer. Now, those who are not getting this answer, I know the mistake that you have done. Mistake number 1. 105,000 you should minus in year 2. It's a cash outflow. And 4th year, again it's a cash outflow 10,000 you should minus. And scrap income 4th year you have to plus. It's an inflow, money is coming. Don't do minus there. If you do minus there, then even income you are counting as outflow. Yes. Guys, you may not get exact 278,410. It may be near to that. That's more than enough, because other two options, if you see, they're far away from this number. In exam, don't waste too much of time. That too, when they give this none of the above, very dangerous. And our morning batch students, they're too talented. If they get 278,411 also, they will take nota and come. I know them very well. Yeah. So just go with nearest answer. And I've told you n number of times in class, unless we have an Excel sheet with us, we are not going to get the 100% perfect answer. 100, 200, 300 rupee difference will always come. And you have seen this while doing regular sum also. Correct? Chalo. Question number 6. Identify the correct statement. Extremely important question. I want all of you to take 30 seconds, read all the options carefully, go very slow. Otherwise, you will give a wrong answer. Identify the correct statement. Who can answer? I will wait. Who can answer? Question number 6. Who can answer this? Some are sending the answers. Good. Let me discuss. First, NPV and PI will always give conflicting conclusion. Very important sentence this is. Everybody listen to me. NPV and PI, sometimes they give conflicting conclusion. Am I correct? Sometimes NPV of A may be more than B, but PI of B may be more than A. That is possible. But sentence says NPV and PI will always give conflicting. That's a wrong sentence. If they say NPV and PI will sometime give conflicting conclusion, that is a true sentence. I hope you're understanding. Yeah, always give conflict conclusion. No, that is wrong. Second, when NPV is 0, PI will be less than 1. This is wrong, sir. If NPV is 0, PI should be equal to 1. Guys, please understand what is the meaning of NPV 0. Inflow is equal to outflow. And what is the formula for PI? Inflow by outflow. If you do one number divided by same number, answer should be 1. Because 100 rupee outflow, 100 rupee inflow, NPV is 0. And for pi, when you do 100 by 100, answer will be 1. How can it be less than 1? Therefore, option B is wrong. Option C, when pi is 1, NPV is positive. No, no, no. When pi is 1, NPV is 0. Just now I told you. When NPV is negative, pi will be less than 1. Pi will be less than 1. Correct? Therefore, the correct answer is option D. Perfect. Good. Many students have sent the correct answer. Let's move on. Question number 7. IRR is 18%. What does it mean? At 18%, NPV will be greater than 0. At 18%, project should be rejected. 18% is the rate at which NPV is 0. If discount rate is above 18%, project will give positive NPV. Good question. Who can answer? Who can answer? Guys, when you are reading theory question, you have to be little slow. Otherwise, in that urgency, we do silly mistakes. You may know the concept, but if you go fast, you will do mistakes. And I know all of you are good in this, going fast and doing mistakes. Yeah, chalo. Read properly. IRR is 18%. What does it mean? At 18%, NPV will be greater than 0. Greater than 0 means positive. And by the way, what is the definition of IRR? The rate at which NPV should be 0. If it is 0, then how can it be greater than 0? Yeah. Second, at 18%, project should be rejected. By the way, this is wrong. Tell me why this is wrong. 18% IRR means NPV is 0 and our IC slash reject. It can't be complete reject. I hope you remember this discussion. If NPV is 0, we can't say reject. It is accept slash reject. It's like a break-even point. No gain, no loss. Correct? Therefore, this can't be said as fully reject. Next. 18% is the rate at which NPV will be 0. Perfect answer. Last one. Please read. If discount rate is above 18%, project will give positive NPV. Those students who are thinking D is also correct, think again. At 18% IRR, NPV is 0. If you try more than 18%, then what will happen to NPV? How can it be positive? When discount rates go up, when discount rate goes up, your value of money comes down. If value of money comes down, then you will have negative NPV. How can you have positive NPV? I hope this is clear. Imagine discount rate is 21%. Now compare at 18%, 0 NPV. Anything less than 18, positive NPV. More than 18, negative NPV. At 18, 0 NPV, correct? Yes or no? IRR is 18%. So the correct answer is D actually, not C. Correct answer is C. 18% is the rate at which NPV is equal to 0. Correct answer is 18% is the rate at which NPV is equal to 0. Yes. Question number 8. Yes, a detailed sum I want you to work out. Mr. B is analyzing two projects X and Y. Each project has a cost of 10,000 rupee and the cost of capital means discount rate is 12% for both the projects. The projects are expected to give net cash flows as below. Year 0, 1, 2, 3, 4. It is minus 10,000 X, minus 10,000 Y, basically initial investment. Project X, 6.5, 3, 3 and 1. Project Y also, you have all the numbers with you. Question is, simple payback period of project X. Please understand the question. Simple payback period. Two things in this. Payback period is the time required to get back our original investment. Correct? Simple payback period will not use discount rate. Following? Correct. That means the question now is, in how many years you are going to get back your original investment? And they are talking about project X. Project X, I have invested 10,000 rupee. Observe, question is only about project X. And I want to get back my money at the end of year 1. I would have earned only 6500. End of year 2, 6500 plus 3000, I would have reached 9500. But sir, that's not enough, you need 10,000 rupee. That means I have to continue even in third year. But if I do full third year, I will earn 3000 rupee. I don't need 3000 rupee. 6500 plus 9000, we have already reached, remember, 9500. Yeah, in descriptive question you will add one column called cumulative cash flow. Hope you are able to recall cumulative cash flow. So 9500 done, we need 500 more only. Yes sir, if I do the project for one full year, I will earn 3000 rupee, but I don't want so much money. How much I want? Only 500 rupee. Cross multiply 500 into 1 by 3000. Experts in calculator, don't do 500 into 1. Yes, you will get a surprising answer. It's 500 only. Great. Divided by 3000. That means 0.1666. 2 years plus 0.166 comes to 2.16 or 2.17. Yeah. Answer is option B. Option B. Good. Guys, this question has project X and Y. So much of details are given, sir, but only project X is asked. What is this? Understand, in exam what happens? They create a case study type question saying what? Consider below data and answer question number 1 to 5. Question number 1, 2, 3, 4, 5 will be based on single data. Therefore, if they don't have enough space in the descriptive section for question paper setter, I am saying, if they do not have enough space in the question paper setting area, then what they do, they shift capital budgeting to MCQ. And capital budgeting, this topic is not suitable for MCQ actually. So what they do, they create a question for 5 marks with 5 MCQs with common data. Actually my next 5 questions are based on this data only, but since I want you to see that data every time, I've made this as separate 5 questions. In exam, what will happen? Consider below data and answer from question number 1 to 5. Data is same. Question 1 NPV, question 2 PI, question 3 payback period, question 4 IRR. So they can cover full topic with 5 marks. Hope you're understanding what I'm saying. Yes. Chalo. Good. Let's move on. Same data, Mr. B is analyzing 2 projects X and Y, 10,000 outflow. You already know all this. Same data. NPV, they are now asking you to calculate NPV for project X. Please understand, to do NPV, I need discount rate. Do we have discount rate in the question? 12%. That means I'm supposed to do 1 divided by 1.12 calculation. I will wait, give a try, and select the nearest option. Question number 9. I will wait. Yes, who can answer? Some students are saying option C, 996. Guys, I hope you have taken 12% DF. Some students are getting 955. Some are saying none of the above. Guys, what happened? Yeah, 960, 950. Yeah, 960. Ah, actually, when the question has such small numbers, 950, I have selected it as none of the above actually. Yeah, because if you see the chat box, I think nobody is getting 996. Am I correct? Nobody is getting 996. Most of you are getting around 950, 960, 965. Yes, 960, 65, correct. I did this in Excel sheet. Even I did not get 996. I got around 960. Therefore, I've kept it as none of the above. Okay. Guys, there is no standard rule here. Sir, 5 rupee this side, 5 rupee that side. Is it okay? You have to see all the options and go by the nearest. Now we can argue, sir, 996, 966 is only 30 rupee difference. But then understand, if you have only three numbers, only 3 4 years, and you have done it in calci, I think some of you have done it directly in calci without writing anything on paper. If you do it in calci, you'll get the exact correct answer. If you do in calci, you get exact correct answer, but that is also 12 digits. In Excel sheet, you can do many more. Correct? So most of you are getting somewhere around 966, 65, 55. Therefore, I'm going ahead with none of the above as the answer. Yeah. Yes, sir. Chalo, next. Question number 10. Same data. Mr. B is analyzing two projects. 10,000 cost, 12% DF. Calculate NPV for project Y. NPV for project Y. Again, by the way, here, before you write anything, if you observe 3,500 is common for all 4 years. I discussed something about this 5 10 minutes back. It's a question of annuity. You'll be earning same cash flow every year. That means we should do 3,500 into summation of discounting factor for 4 years. Remember PVAF. I can see couple of students are now sending the answer as option B, 630. PVAF if you do in calci directly, then there won't be any MCQ, any rounding of problem also. I think now there is no confusion of nota. Yes, perfect. 630 is the answer. Looks like everyone got. I will continue. 11 sum, same data once again. Here also, simple payback period for project Y. How to do, everyone? How to do? 3,500, 3,500, 3,500. Same money. In calci, if you just add first and second, you will get 7,000. If you add third year also, you will cross 10,000. You will get 10,500. Correct? Yes. Sir, we don't want 10,500. We want only 10,000. Looks like option C is the correct answer. You'll have to do cross multiplication. Minimum 2 years, because end of 2 years you would have earned 7,000. Plus, if you do for one full year, you learn 3,500, but you want only 3,000. If you cross multiply, you get 0.86666. Therefore, we can go ahead with option C. Everyone. Option C correct? Yes. Can I proceed? Question number 12. Again, same data. Question is calculate IRR of project X. If you ask me, this is the most dangerous question. Why is it dangerous? We all know to do IRR it takes a lot of time. Correct? IRR takes a lot of time. But don't worry, if they ask these kind of questions, it will be for minimum 2 marks. And by the way, for 12% DF, you have already solved positive NPV numbers just now 2 minutes ago. That means you have to take one more trial, correct? You can take any. And since they have given 13, 18, 20, guys, we can even substitute and check whether at 13% I'll get 0 NPV, whether at 18% I get, whether at 20 or at some other rate. I can see one student is saying roughly 18%. Others 1 divided by 1.13, that is 13%, you check. If it is not happening, 18 you check, not happening, 20 you check. Because IRR question in MCQ format, they have already given you all options. So you can check whichever works, you tick. And if none of the three is going to give you 0 NPV, then you can tick nota. No confusion there. Looks like many have option B, 18%. Good. I can see there many have the same answer. Yes. Perfect. Option B, 18%. Those who are taking little extra time, if I proceed to next question, this video will be there on YouTube. Mark the question number now and then come back and redo. No problem. Okay. All right. Same data. One more question. Calculate PI of X. Now to calculate PI, I should first know discounted cash inflows. I will then divide that by outflow. Correct? Now discounted cash inflows is nothing but year 1, 2, 3, 4 numbers multiplied with 12% DF. I think you have already done it just now. Guys, you have to solve. Don't sit and listen. We are here to make good use of this time. You have to practice. In a way, I'm doing a quick revision of the topic also. Then if you just sit and relax, it won't help. You have to do. Yes, many are saying 1.1, option A. Good. 1.1. Yes, sir. All good. Same data. One more question. They're asking you PI of Y. This we should be able to do very fast because 3500 is constant. And then you have 12% summation of discounting factors. With that, you will get to know total cash inflows. Simply divide by outflow. This should be easy. Who can answer first? I can see Lavanya B, option B. Suman, Dhanashri, Mukta, Siri, Monica, Shalini, Meda, Tanuja. Good. Everyone has option B. Chetana, yes. Good. Sumedh, Saujanya, Praveen, Charles, yes. Everyone got the answer. Whenever you have constant cash inflows, you can easily do summation of DF. Yes. Correct answer is 1.06. 1.06 number. Yes. All good. Next. Different question, by the way. Read. A firm with 20% weighted average cost of capital, WACC means DF for us, is evaluating two projects for this year's capital budgeting. Post tax cash flows are given to you. Year 0, 1, 2, 3, 4, 5. Project A and project B numbers are given. NPV of project A is dash is the question. NPV of project A. Now we have all the cash inflows starting from 200, 250, 400, so on. And they've given DF as 20%. I cannot use summation of discounting factors. Yeah. 600 is outflow. Go ahead, give a try. Who can answer question 15? Who can answer question 15? I'm waiting. Question 15. Suman is saying 281.2. Option B. Others. Siri, Vishwanath, Zishan. 15B. Yes. 281.2 is the correct answer. Those who are not comfortable with doing this in Calci directly, please don't take any chance. If you want to write, work out, do it. It's okay if you take little extra time. Yes. It's not the Count Banega Karodpati's first round. What is that called? Fastest finger first. You've seen that? We are not doing that. Don't worry. Take your time. 281. Chalo, perfect. Same data. One more question. 20% WACC. Project B NPV they are asking you. Project B NPV. Similar style you have to do. If you have done the previous sum by writing, you can try this in Calci just to improve speed. Who is sending me the answer? 16th question. Looks like 84.2. Yes. Guys, when you send the answer in chat box, send question number and the answer, please. Question number 16. Most of you are saying 84.2, option C. 84.2, option C. Good. Perfect. All good. I can see many of them are sending answer now. Yes, sir. Question number, those are still doing. Here is the final answer, 84.2. And don't worry, all of this will be shared with you. Yes. You don't have to worry about final answer now. Now practice, discuss, learn. Correct answer and question soft copy will be shared with you. Chalo, question 17. The span of time within which the investment made for the project will be recovered by the net returns of the project is known as payback period. I think option B. Correct? Understand? Span of time within which the money will be recovered. What does it mean? I've invested 1 lakh rupees, started a project. In how many years I'll get back money? In how many years I'll get back money? It's called as what? Payback period. Option B. Simple question. 18th one. Projects with. I want you to answer. Question number 18. Project with dash are preferred. Lower payback, normal payback, higher payback. All of this. Take your time. When you say payback period, I already told you it's the time required to get back money. Time required to get back money. Should we get back money early? Should we get it back late? What is the correct answer? We should get as early as possible. That means payback period number should be low number, less number. Option A is the correct answer. If you think high payback period, understand high is correct for NPV, high is correct for PI, high is correct for IRR. Correct? All those are good indicators. Payback period represents time. When you say more time, that means you're saying I should get money as late as possible. How is that correct? That's not correct. You should get the money as early as possible. Yeah. Question number 19. The internal rate of return criteria for project acceptance. Companies can accept all projects which have IRR equal to the cost of capital, IRR greater than cost of capital, less than cost of capital, none of this. Who can answer this? Question 19. IRR should be equal to cost, greater than cost, or less than cost. If you're not able to get the theoretical answer, put this. Suppose IRR is 18%. What does it mean? At 18%, NPV is 0. At 18%, NPV is 0. Now, if you think of 16% discount rate, what will happen? NPV will be positive. Correct? Because if discounting rate comes down, value of money goes up. If value of money goes up, then what happens? Your NPV will be positive. That means I should choose all those projects where IRR is higher, greater than cost of capital. Correct? Yes. Good. Many have sent the correct answer. Question 20. The project is accepted if PI is equal to or less than 1. This looks like wrong to me. Think PI is equal to or less than 1. What is the meaning of PI equal to 1? Inflow and outflow are same. If inflow and outflow are same, I will get 0. Correct? And if it is less than 1, I'll be under loss. Correct, sir. Option B, NPV is positive. Sir, this looks like correct answer. But hold on. Option C says PI should be greater than 1. This is also correct answer. That is why option D should be ticked, both B and C. Option D is the correct answer. In urgency, if you do not read the question, you will tick B because B NPV is positive. You get overexcited. Don't do that, please. Yeah. Sure. Correct answer is both B and C. Therefore, option D should be ticked. Question 21. Following information of M Limited is given to you. So much of story. Read properly. Year 0, 1, 2, 3, 4. Cash flow negative 30,000, but that means it's investment. And then 4 years you have the numbers. The discounted rate for cash flows will be 12%. Accounting profits are same as cash flow except the initial expenditure should be depreciated over 4 years. There is no scrap value at the end of year 4. Calculate NPV. Now just to confuse you, read that line after the table, second line. Accounting profit is same as cash flow except depreciation. Initial expenditure depreciated over 4 years, and question is about NPV. Tell me, for NPV, what do I need? Cash flow I need or profits I need? Everyone, very important. Observe. They gave some story about depreciation. For NPV question, I need what? Cash flow only. I don't need your profit. I don't want to calculate PBT, PAT. I want CF. I want cash flow. And since cash flows are directly given in the question, why will I worry about depreciation, adding back, or should I deduct, etc.? Not necessary. I hope this is understood. Yes. Question 21. Give a try. Who can answer? They want NPV and they've already given you cash flows. When cash flow is already there, this depreciation is not relevant. Imagine if question was PAT and then there was depreciation. For PAT, I would have added back depreciation to reach CFAT. All that is correct. But question itself is cash flow. Why should I worry about depreciation? Correct? I think the final answer is 2771. Nearest to that is option B. Everybody I can see good. Many have sent the correct answer. Option B. Yes, sir. 277071 approximately. Question 22, same data, but now they want IRR. Now they want IRR. To do IRR, don't waste time. You have already learnt in MCQ model to do IRR. Instead of doing again 10%, 20%, and then cross multiplication, you already have three options: 13.5, 15, and 15.7. You can apply and check which one will work. And if none of these are working, you have nota anyway with you. I think answer is 15.7. Let's wait and see. Siri has sent the answer already. 15.7. Siri, good. Anyone else? When you do 15%, you will get a hint. You are almost near to 0, but not 0. Therefore, slightly above that may give you 0. And that's what happens when you do 15.7. Correct? You're almost 0. Again, remember IRR sums. You may never get exact 15.0 and exact 0 NPV. You may get some positive 5 rupee, 6 rupee, or negative 4, 5 rupee. Please don't worry. The correct answer is far away, say 18%. Then you go with Nota. But 15.7 is the nearest best answer. Yeah. Perfect. Now I can see everybody is sending the answers. Good. 15.7% is the answer. Let's move on. Yes. Question 23. Read, go slow, and send me your correct answer. PI of 0.92. PI is less than 1. Observe. For a project means that project cost outflow is less than present value of benefits. Project NPV is greater than 0. NPV is greater than 1. Project returns 92 paise in present value for each rupee invested. Go slow and send me your answer. Yes, please. Good. Very good. Those who have sent option D, I'm happy. Read the first one. Many are confused in option A. Project outflow is less than present value of project's benefit. If outflow is less, then inflow is more. If inflow is more, how can PI be less than 1? That's a wrong answer. PI will be greater than 1 if you go by option A. Option B says NPV is greater than 0. NPV greater than 0, PI will be greater than 1. And it says third option, project NPV is greater than 1. Greater than 1 means what? Again positive 1 or more than 1. If it is more than 1, then again PI can't be less than 1. Therefore, D is the correct answer. Project will give you 92 paise back for every 1 rupee that you have invested. Correct? PI itself is 92 paise. That means you are actually losing 8 paise. Am I correct? You are losing 8 paise. 1 rupee you invest, 92 paise you get back. NPV is negative NPV. This is a loss project. Hope you are understanding my sentence. Yes. Hello, 24. Read. LMN Corporation is considering an investment that will cost 80,000 rupee and it has a life of 4 years. During first 2 years, the net incremental cash flow after tax anyway 25,000 per year. Remember, for first 2 years they said 25 per year. For last 2 years it is 20,000 and one more 20,000. So read it again. 80,000 outflow, 25 inflow, 25 inflow, 20 inflow, 20 inflow. Simple. What is the simple payback period for this investment? For simple payback period, I don't have to worry about discounting. Sir, at the end of year 1, I would have earned 25,000. End of year 2, one more 25, together I would have earned 50,000. In mind, do this calculation. Third year I will be earning 20,000, so 50 plus 20 I would have reached 70,000, but I have invested 80,000. I have reached 70,000. I need 10,000 more. If I do full fourth year, I will earn 20,000 rupee, but I want only 10,000 rupee. That means I should do only half year. Half year means 0.5. Half year means 0.5. That means I should go by 3 years plus 0.5 years, 3.5. All good. Hope everyone is participating. Same answer, 3.5 years. Good. Everybody. Chalo. Next. A project whose acceptance precludes the acceptance of one or more alternative project is referred to as dash. Understand the meaning? Whose acceptance precludes the acceptance of one or more alternatives. That means if you do project A, you can't do B. You don't have so much money to do A as well as B. Imagine a situation. project A, project B, both have positive NPVs. Sir, I can do both. Correct, but you should have enough money, right? And what if I say, boss, you have money only to do one of the two projects? If you do A, you can't do B. If you do B, you can't do A. That means they're called as what? Mutually exclusive projects. Selection of one means rejection of the other. Simple sentence. Selection of one means rejection of the other. Called mutually exclusive. Good. Let's move on. 26. Which of the following statement is incorrect? That means three options should be correct statements, only one is wrong statement regarding a normal project. Yes, sir. Option A. If NPV of the project is greater than 0, then PI will be more than 1. This is a correct statement. Question is which one is incorrect. Therefore, understand A is not the final answer. Second, if IRR of the project is 8%, NPV using discounting rate greater than 8% will be less than 0. Please read properly. IRR is 8%. If you calculate NPV with a DF more than 8%, then NPV will be negative. Negative means less than 0. Sir, this statement is also correct statement, sir. But question wants you to find out incorrect statement. I'll continue. Option C. If PI of a project is equal to 0, sir, what is this PI equal to 0? Sir, here itself I think something is wrong in this option. Do you agree with me? Everybody go slow. Everybody go slow, I said. PI of a project is equal to 0. We have not worked out any question where PI is 0. NPV can be 0. PI is 1, greater than 1, less than 1. What is PI 0? Think. Sir, I'll keep this option on hold for a minute because this looks like incorrect sentence. Yeah. Let's check option D. If IRR of a project is greater than discount rate, then PI will be greater than 1. Please read properly. If IRR is more than discount rate, NPV will be positive. If IRR is more than actual discounting, NPV will be positive. And if NPV is positive, PI is more than 1. PI is more than 1. Sir, this is a correct statement, sir. So I can't tick option D. Therefore, the wrong statement is option C. Wrong statement is option C. Guys, this is a slightly confusing question. I hope you have understood. Everybody, if not, play this last 1.5 minutes part once again. I have explained in detail, but it is confusing. Anybody has doubt in question 26? If you think some other option may be the answer, let me know. I can explain in quick 1 minute. Anybody, if you need help, please ask. I'm looking at chat box. Understood? Saujanya is asking, sir, option D. Saujanya, please read option D. IRR of a project is greater than discount rate. You put some numbers. IRR 12%. Okay. Discount rate 10%. Now what happens? If IRR is more than discount rate, project will give you positive NPV. Yes or no? IRR is 12. Actual discounting is 10. Think IRR is 12%, NPV is 0. Hope you're understanding. If you take lower DF, 10%, 9%, 8%, NPV will be positive. And if NPV is positive, PI is greater than 1. Saujanya, I hope you understood now. Yes. Chalo, good. Question 27. The basic feature of capital budgeting decision. Option A says current funds are exchanged with future benefits. Correct, sir. Year 0 outflow, year 1, 2, 3, 4, 5, 6 inflow. There is an investment in long term activity. Definitely, short term we don't study this topic. Short term investment is working capital topic. The future benefits will occur to the firm over many years, series of years. Correct, sir. Option D, all of the above should be our final answer. Yes, simple question. Right, sir. Question 28. Capital budgeting is important because of risk and uncertainty, irreversible decisions, long-term implications, all of the above. All of the above. What is risk and uncertainty? Today I invest, that I am 100% sure money is going. In future money will come, uncertain, and whether it will come or not, I don't know. What if there is a big economic problem and we end up having huge losses, big recession? Risk and uncertainty, irreversible decision. Why? Once you purchase all those machines and start the project, you would have hired employees, given them training, purchased raw material, all that is done. Now it is very difficult to say I will stop the projects, then I have to return all raw material, sell all the assets, and remove all my employees. This is not an easy decision for business. Third one, long term implication. You start a project today for next 10 years. Remember, if you take one wrong decision today, it will impact you for next 8 years. Correct? So capital budgeting is about all of this, right? One last question in this chapter. The project is accepted if option A, PI is equal to or less than 1. Definitely no. PI is equal to or less than 1, I won't accept. NPV positive, true. Project is having PI more than 1 is also correct. I think we should go with both B and C. Are you with me? Question 29, D should be the answer. Yes. Perfect. Chalo, good. Everybody. Correct answer. With this, we are done with investment decision. Some students are saying, sir, this 29th question looks like a repeated question. Is it? Don't worry. Then for tomorrow's discussion, next topic, I will add one more question to you. Okay. I know some students are not happy, sir. You are underutilizing us. I know. Yeah. Chalo, no problem. Risk and leverage. We'll have one more question. Yeah. All right, guys. So we are closing this topic with this question. I hope the session was helpful to you, and my plan is to do this itself on daily basis. I want you also to participate, not just come sit and go. Yeah. So tomorrow, 6th April, my target is to discuss risk and leverage, cost of capital. This is our timetable for next 5 days. If you do your basic studies and then come to session, it will help you a lot. It will improve your speed. It will get to know how they can twist the question. You will also get to practice some theory MCQs. But you have to do your basic study and then come. I hope this is clear to everybody. Yes, Praveen, don't worry. Once all 5 sessions are done, I'll be sharing a combined file with all of you, both question and answer. Don't worry. Okay. Entire syllabus, one single PDF, I will share it with you. Do not worry. Okay. Chalo, everybody, tomorrow, same time, again we are meeting for risk and leverage and cost of capital discussion. Thank you so much. Take care. Bye. Bye.